Welcome to OpenECRI's Trader Training. My name is Toby Gennaro, and what I'll be talking about today is the power of the mind and how it applies to trading. Discipline, ego, regret can be some of the most damaging factors in determining our mindset for trading. So let's go ahead and take a look. Let's talk about the type of person that you may be, your character traits. Do you have a problem being wrong? Does your current profession require perfection on the job? If these two character traits sound like you, then you may be susceptible to the risk of damaging ego. Here are some things you can do about it. Don't get caught up in judging your trading success based on individual trades. Instead, think of each trade as an individual instance. This will help you to put things into perspective and to not fear taking the next strategy setup after a losing trade. We're interested in allowing the probabilities to play out over a larger sample set of trades. So remember to focus your attention on flawless execution of the trade strategy and not necessarily the outcomes of each trade. This will put you in the right frame of mind to trade consistently. You're not going to be right in this business all the time. And as one trader puts it, Marty Schwartz says, I turned from loser to winner when I was able to separate my ego needs from making money, when I was able to accept being wrong. Before, admitting I was wrong was more upsetting than actually losing the money. So lack of discipline as a trader can be a real problem. Now, one of these instances can wreck a good week or even a good month. Here's how it works. What do you feel like after a losing trade? Okay, are you angry or fearful, or do you want revenge? Sometimes traders will jump right back into the markets after a loss and chase a move trying to make up for that last trade. Or in the same way, they'll abandon the trade strategy after a few losses and go back to a former style of trading. Usually this point is where the trader does not use a stop loss and begins taking unlimited risks for limited gains. So learn to be self-aware and understand when you're feeling this way. You're physically, having to remove yourself from the screens and just take a break from trading if that's what you need to do. This way you can come back refreshed without those feelings of anger or revenge, which tend to inspire that undisciplined type of trading. So start back to trading by planning out your trades and trading your plan. This will get you into the right frame of mind and thinking about the markets more systematically. Trader Mark Douglas says the defining characteristic that separates the consistent winners from everyone else is this. The winners have attained a mindset, a unique set of attitudes that allow them to remain disciplined, focused, and above all, confident in spite of adverse conditions. So regret can be a very powerful thing. It tends to distort our perception of wins and losses or success and failure. We usually feel regret when we sense that we have lost more than the original risk. A very typical regret is when we have not taken profits only to see the market move against us for a loss. Okay, this can lead to anger about the markets and some of the other risks that we just talked about. And typically we may want revenge on the markets, which leads to a whole host of other problems. So understanding how we feel after trading losses can help to minimize our reaction to those feelings of loss, but it's important for us to take action and have a plan for what we will do after a trading loss. So to learn more about psychology and decision making in trading, check out the OpenECRI website under Education and look for other trading videos and webinars, or you can call customer service for more information and educational events. Thanks for watching OpenECRI's Trading Education.